This video is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC and Felix Fry are not registered investment advisors. Options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. With NVDA earnings out last night, we're seeing some flow in Google. I think it's interesting. It gives us more evidence on what's happening out there in the big tech names. Let's take a look. All right, so once again, we land on the homepage. Again, 100 results. I'm going to look at no spreads greater than 2 weeks, and I'm looking for buyers. Now, so right here we see far-fetched. This is basically, the stock is a option by itself. AMC, PBR trade, again, 16 cents, 3 cents, 5 cents. All of these are something I don't pay much attention to. 3-cent options, 5-cent options. Not that it can't give you any signal, but I stay away from this stuff. It's generally options that are closing or retail coming in trying to play a squeeze of some sorts, but generally not the options that the top 1% are buying to open. Then you see Google here, 5,000 June 21st, 130 puts. This is a meteor option, 1120 on the offer with the stock 131.41. Also interesting because it's close to an at the money option here, and it's usually not the one that they're coming in for, which also can give you some hint as to their target stock price. But we'll take a look at that in a second. So let's look at Google. And we see the August, and then if I just click here, I can skip to June options, January options, October 140s, and September. So the one that I saw here was the June 2024 130 puts 5,000 times. Paying 1120 with the stock 131.41. That was crossed by the investment bank and the customer. The customer bought it with the open interest 2000. That was an opening trade and happened at 1128. Now, there's also a few block trades that happen. You can see here 10. This one was together. You see the time is exactly the same. So that was the 170-220 call spread. They paid $13.89 for the 170 calls in June of 2025. We're talking about almost 2 years from now. 170, 220. That's 50 points wide. They paid $13.89 and sold these at $464. So that is $9.25, 9.25. So they paid 9.25 to make 40.75, which isn't that bad. 9.25 to make 40.75 is about 4.5 to 1. So I think that's interesting. That's one. The put is also interesting. So they're buying puts. Someone is also coming in and buying call spreads with the stock off here. Now, NVIDIA earnings were out today, and you can see, let's take a look at it. Just NVIDIA for a second. NVIDIA had a massive spike, actually hit I think it was 510, 515 last night. Came back this morning almost to orange, but now it's creeping higher. The point that I'm trying to make here with NVIDIA is that NVIDIA is a special case. It is a stock that has cornered the AI chip market, and B2B, business to business, is exploding. I mean, all the big cap names are buying AI chips. That doesn't mean that the S&P 500 is going to go up on that. And I think there's more being said when you look at Citibank. This stock is straight down, trading 40. I have it. Let's take a quick look at Citibank. I have it going towards the 38 range, 38 and a half. So that would be another $2.5. That's another 5% lower. If Citibank's 5% lower, what are the other banks doing? And then what's the market doing? So this is one that I'm watching. Citibank, a bellwether for the market as well. And so when you look at Google, in general, we have seen that the tech stocks have been for sale, Google has actually been pretty strong, one of the strongest tech stocks over the last few weeks. But now we're seeing this type of flow coming in, and it looks like they're shifting the risk reward. They'd rather be long. Remember, they're buying these 50-point wide calls for 2 years. They'd rather be long call spreads and get out of their stock. So those call spreads are going to cost them 9.25. If the market does turn, is there $9 risk to the downside holding stock? I'd rather just be long the calls instead of stock going to 100 again, which it could easily do. So we have here, let's draw this out a little bit, what we're seeing. Call it 151-ish and 83-ish. So, okay. And something's going on here. Okay, the stock is acting strong with the market coming off a bit. The question is, can Google come back towards this range right here? I would say absolutely. Why not? Right? The 50 weekly moving average is turning up. The 200 weekly moving average is up, but certainly a retracement back here would be par for the course. Call it 107.5, 105-ish. You should see buyers. That would be par for the course coming down. Now, they're looking at the 170, which would be somewhere 30, 70, somewhere up here. Let's just look at that all the way up here. We're talking about 170 and up, let's call it, and straight up. And what are they thinking there? Well, let's take a look at this larger wave here. We have a wave from 50 to 151, call it. So it's 150, 151. That's about 101 points. And 101 points plus 83 would be 184. So it starts getting you in this pocket. And if it's going that far up, why couldn't it go higher? Which it could. So that's sort of what they're looking at, and that's how they're framing this. But a natural pullback to this level, I don't see why not. So I think it's a big risk reward shifting here for the large institutions. They're trying to maintain the upside, but protect themselves over the course of the next, let's call it 6 months to a year. And we're seeing those types of trades consistently, and you're seeing names outside of NVDA for sale. You can look at the top 7. Apple has been for sale, coming to a level 160, 165, but we've seen put buyers that are looking for 130. Microsoft has come for sale. Netflix for sale. Okay, nothing panicky, but natural retracements, and there's still another 5 to 10% for a lot of these that it can come down, and it would be a natural pullback. So that's what we got. We're seeing Google risk reward shift, but we're seeing a lot of that in the big tech names. They are for sale. Usually when the selling starts, it doesn't end until the end of the quarter. They're going to be out there unloading some of this stuff. Again, not in panic, but just day to day, getting their positions down. That money doesn't get parked anywhere. It's probably going to find some other areas. And so that's where you're trying to figure out where the other areas that the money's going to go to. So they're going to get out of this big tech. They've made a lot of money on these huge moves. So where's that money going to go? That's the trick here. And so I hope that helps. Don't forget to smash the like button, ask questions, comments, and I will see you on Monday. Take care.